Warren Buffett is the fourth richest man in the world with a net worth of $74.3 billion. Yet, if you go back to the end of 2007, his net worth was only $34.65 billion. And yes, I say the word only with a hint of sarcasm in my voice. So the question should now become, how did Warren Buffett more than double his net worth in such a short period of time? It essentially comes down to a couple of key things, and I'll explain this soon. One is the 2008 crash creating opportunities. Two is choosing the right opportunities to buy to invest in. And three is doing this at the right time. And this is important because we're in a period now where we are going through an economic crisis. If we are smart like Buffett, we can double our wealth as well, or perhaps even more. But first, I need to show you how he did it. So what happened in 2008, most of you probably already know, it was the housing bubble crash. Banks were lending out too much money to people who could not afford to pay their mortgage back, and eventually things collapsed on themselves. The housing bubble popped, and with this, so did the stock market. It lost over 50% of its value during that time. But Warren Buffett, the world's greatest investor, as some people call him, he was smart. He had been saving up cash for this exact moment. And after the crash, and in the midst of the crash, was his time to pounce. One of Buffett's great deals made during this time was his $5 billion investment in Goldman Sachs. The bank was struggling big. They needed cash, and Buffett so elegantly swooped in, gave them the cash that they needed in exchange for the preferred stock. And 3 years later, he redeemed the shares, cashing in a $3.7 billion profit, a 74% return in such a short period of time. And I want to go through some of the other companies that Warren Buffett invested in during these times so that we can get a good idea of what we should be investing in during the current market crash. So it is important that I show you the mindset that Buffett adopted during these times, which helped him make the right decisions and in the end earn a lot of money. The mindset was simple. He told the public, now is a great time to buy a slice of America's future at a marked down price. Two basic principles: buy in the great country of America, the USA, and secondly, buy cheaply. And this is exactly what Buffett did. During the 2009 period, once stocks were selling for dirt cheap prices, Buffett was buying. There were three key stocks that I've noticed through my studies that I saw him buy in 2009. One was the great American healthcare company, Johnson & Johnson. They sell a range of skincare, healthcare, medical device, pharmaceutical type products throughout the whole world. And the stock has done tremendously well for Buffett. He was buying around this price here, the $50, $60 range. Nowadays, it's selling for around $140 price tag, giving him about 170% return. And not to mention the consistent dividend that J&J pay. And another group of stocks that he was adding to was the banking sector. As I said before, he bought Goldman Sachs, but he was also adding to his Wells Fargo and US Bancorp positions. These were one of the badly hit sectors during that crash and also in today's crash. So the main stock that Buffett was buying was Wells Fargo, and he was buying around that price of $12 to $30. And to be honest with you, the return that he has made was not overly impressive, apart from obviously the consistent dividend that he's been receiving. So right now the price is just over $30, and the reason why the price is so low is because it has crashed again in this crash. This does prompt the idea into mind that now may be a good time to buy bank stocks. You know, as Buffett said about bank stocks recently, and this was even before the crash, banking is a good business if you don't do dumb things on the asset side. I mean, basically, Buffett said, the banks we own earn between 12 to 16% or so on net tangible assets. That's a good business. That's a fantastic business against the long-term bond at 2%. And the last position that you can see Buffett adding to during this time of economic distress was a company called Walmart. I'm sure you've heard of it. They have an array of discount stores and grocery stores throughout the United States. They generated $510 billion worth of revenue in 2019 alone. That's around the same amount of Nigeria's entire GDP. They're basically ubiquitous in the United States, giving what Buffett calls them an economic moat, an advantage over competitors. Numbers-wise, they've made Buffett a lot of money. They're up around 150% since he started buying. And they're a stock that hasn't been overly affected by this economic crash because they provide such an essential service. So I hope you guys are starting to get the natural drift as to what made Buffett all this wealth. It was smart buying of good quality businesses at cheap prices. And probably one of the best purchases that Buffett has made to date is a company called Apple. And Warren Buffett started buying into this Apple position in the first quarter of 2016. And ever since that first buy, Buffett never looked back. He kept on buying, and he made it his largest position in his portfolio. To this day, it accounts for around 23.8% of it. Apple, it's a fantastic company. Why? Because throughout the whole world, consumers love their products. The iPhone, look at every second person, they'll be staring at one. The MacBook, every third person, they probably own one. The iPad, the watch, the Apple TV. These might not be as popular, but you get my point. Apple is a worldwide brand that is known and bought around this globe. And this is what Warren Buffett said on Apple. It's probably the best business I know in the world. It's an incredible company, and I should have appreciated it earlier. Buffett says hundreds of millions of people live their lives by the Apple phone. That is some of the most valuable real estate in the world. These people have loads of buying power. They're able to do business or learn information or whatever it may be through it, and it's part of their habitual living. They spend hours a day on it, and it does all kinds of things for them. It's fair to say that Buffett loves Apple. So Apple is probably just the main example that you can give of Warren Buffett's incredible portfolio of stocks. He focuses on buying good quality companies at cheap prices. We've already talked about Apple. We've talked a little bit about his bank stocks. But another great company that he's bought throughout his time is Coca-Cola, accounting for nearly 10% of his portfolio. Again, the pattern that you should notice is that it's a business, a brand, that is known and loved around the world, just like Apple. Even the other day, I noticed this photo of my extended family, and what was in the middle of the photo? A big bottle of Coca-Cola. Consumers around the world have this deep love for Coke. Then you've got American Express, Kraft Heinz. Well, that's been a bad buy for Buffett. I guess we all have our bad buys every now and again. Then you've got a bunch more banks, airline companies, and General Motors there as well. So he's not just relying on one sector for his and his shareholders' net worth, but a range of sectors. And what he does, as I've said multiple times throughout this, is he tries to buy these companies at cheap prices. But the problem is that often it takes a lot of waiting before these companies are cheap. So when it does become cheap, aka the 2020 crisis, you want to be accumulating a lot. As Buffett says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. So what's the one situation that quote brings to the forefront of one's mind? Obviously, the 2020 crash, where prices are still down by a lot. Now, I wouldn't say that it's necessarily raining gold right now. It's not down as much as the last crash, but perhaps it's raining silver or platinum. So now is a great opportunity for us to be looking to do similar things that Buffett did 12 years ago, buying good quality businesses for cheap prices.